Hi, everyone. It's John again. It's time for a general market update. It's September 10th, 2022. Again, this is a production of Rain King LLC. I'm an individual growth stock investor, not affiliated with IBD or MarketSmith. I have been a longtime investor, and I'm the founder of the Blue Sky annual event, which is a good lead-in to this slide here. Our registration for Blue Sky number 5 is open now. It's Saturday, October 15th. This is the link. You'll see this link on my Twitter page. It's pinned to my Twitter page. We have an awesome list of speakers from Scott O'Neill to Brian Shannon, Mark Minervini, and Jared Tendler will be doing a special section on psychology and mindset. And then we also have three of the next generation of market wizards, if you will. And we have a unique session planned with all of them. And Jason Thompson will also be with us, who is the founder of tickermonkey.com. So I encourage you to join us. This is a great event, and the knowledge that you can gain in one day is just tremendous. So let's talk about the markets. Our agenda is pretty straightforward. We're going to talk about the importance of flexibility. We'll look at the market internals briefly, and then this question is still out there. Is this a bear market rally or a new bull market? So we're going to go back and we're going to revisit the retest scenario that I've laid out a couple times over the last month. And then I want to go back to some of those historical examples of how growth stocks set up and really take a check-in on some of today's names. So starting again with a slide that I've used over the last month, which is the psychology of a retest. We talked about once you get this strong rally, everybody got rejected at the 200-day, and the markets come off pretty sharply. And the retest is, again, where I say the rubber meets the road. We're trying to figure out if the pros that missed the initial rally are going to buy this pullback and start taking positions, or is everybody going to bail out and start another bear leg down? So that's the big question that we're all trying to understand and try to read the market. So the bottom-in process for the Nasdaq, we outlined a couple of scenarios. One is this wiggly blue line that we've come down about 13%, pretty sharp correction on the Nasdaq. You'll notice that this low is about 3 months from the initial low in June. And we talked about that as a recovery, as the retest, then possibly moving higher. The other scenario was this rally stalls out and maybe we turn lower and potentially break the June low. So we have to be very flexible here on how this could go. Now, I pulled this quote from Richard Wyckoff. He says, "Successful tape reading is a study of force. It requires the ability to judge which side has the greatest pulling power, and one must have the courage to go with that side." So we're very flexible right now, trying to understand that question about if institutions are going to support this market or if they're going to sell it off. So a few updates on the internals. Last time we spoke about a week ago, this was the New York Advanced Decline line on a weekly basis, and I shared that this didn't, initially looked really good, but then it really took a bad turn in the last week of August, and it didn't look very good right here. Now, this is where flexibility comes in. The market actually found its footing last week, and we had some improvement. Still not out of the woods, but Friday was a very good day for the market. There was very strong breadth on Friday, so that's really encouraging. So as this rally progresses, what I'm really going to be focused on is I'm going to watch the rally, the quality of that rally, to see if the AD line weakens. If it weakens and can't really cross over this peak we had in the middle of August, I'd get very concerned. A weak rally and this rolling over could point to the new lows scenario. So a few things on sentiment. This is the American Association of Individual Investors. This is their weekly survey. You'll notice that we have some real extremes here. We only have 18% of the survey is bullish. Hardly any bulls out there as of the 7th of September. You'll notice historically, historical averages are down here. So this is extremely low bulls. And you'll notice that there's extreme bearishness. 53% are bearish. And I believe this is the highest reading since April. So it's clear that this sentiment indicator is showing that everybody is on one side of the boat. It tends to be a contrary indicator, but it's really secondary to price and action, volume action in the indexes. Some of you may have seen this around FinTwit, came from Sentiment Trader, essentially is showing that institutions bought a record amount of hedges most recently. And they compared it to, this is 3 times as much hedging to the downside as it was back in the financial crisis in 2008. Again, what this is really speaking to is, if it's true, everyone is on one side of the boat here. Basically, it's saying it's a fait accompli. We're going to make new lows in the bear market. So it really brings up a great quote from Jesse Livermore. When things become obvious, the obvious really rarely happens, and the unexpected constantly occurs. So when we're extremes and everybody's on one side of the boat, the market tends to fool the majority. And we'll have to see how it plays out, but certainly Friday was a pretty good day in the market when everybody was expecting it to have more selling. So I want to look at some current leaders in the market. Now, this is a slide I showed on August 26th, and I've been using this 2 lists, really a type 1 growth names and then type 2 growth names. And I created this list a couple weeks ago of some names to watch. I'm going to focus in this week on Enphase as a type 1 and CMG as a type 2, because it's important to look at these things in real time. So let's go back to, I guess, what this is all about. This is the 2003 bottom. As I mentioned, eBay was one of the first stocks to break out on the initial rally. And then as the index made another low about 5 months later, eBay resisted the low and eventually showed real superior relative strength. And it rallied once the market followed through in March of 03. So let's take a refresher. I've shown this in previous videos if you want the details, but here it is. eBay broke out right along the market low. And the important part of this is, as the market retested its lows, you can see that eBay resisted that decline. And you can see the superior relative strength of the stock as the index tested lows. eBay only corrected 6.3%. The market had corrected 17%. And when the pressure came off the market and we had a follow-through day, eBay took off. So burn that into your mind as a type 1. And that's type 1 being a stock that breaks out on the initial thrust. So let's compare that to what is a type 1, Enphase. Again, very similar. The stock was resisting, the market was going down, making new lows, and this line is lining up a new low in the market. And you can see that Enphase was well off of its lows. It continued to go sideways, and it eventually broke out and had a very surge on its earnings reaction. Now in yellow, I'm highlighting right here is the S&P. This is the pullback that we've experienced in the Nasdaq of 13%. So it's coming down. And you'll notice, what did Enphase do? Enphase basically went sideways during this period. Look at the relative strength line. This is superior relative strength as the market is coming down for a retest. Now the market corrected 13%, and Enphase during this period only corrected 12%. This is a high beta stock of 1.95. We would have expected Enphase to come in 25, 30% perhaps. So it's really showing its resistance to the pull of the market. And this is after the stock basically doubled from 150 to 300. So this is a type 1 that we should be keeping our eye on. It's certainly starting to lead the market higher. So again, on the potential 2 lists of names that I had provided, let's look at CMG. So as a reminder, a type 2 is a stock that has been basing and then breaks out after the successful retest. So here's the 1990 bottom. Here's the bottom. There is the thrust between the 50-day and the 200-day. And then the market came back in for a retest about 3 months after the low. And you'll see here that once we had the follow-through day, here's where Home Depot breaks out in 1991. So let's look at that in a little closer detail and then really try to line it up with CMG. So here's Home Depot. So when the market made its lows and had the initial follow-through day, you'll notice in yellow, Home Depot is still in a base. So it's making a base. And you'll notice that when the market started to pull in, this is where it's important to coordinate the general market with your stocks, is the market pulls in for the retest in this orange zone. And what is going on with Home Depot? Home Depot is forming the handle of its cup with handle base, coincident with the market retest. And when the pressure comes off the market and we got the follow through day, I've lined that up very shortly after Home Depot breaks out and has a major, major move. So that's another situation that is a type 2. So putting this in real time in today's stocks, look at CMG. CMG has been forming a large, I think this is a typo. Sorry, it's not a 6-month base. It's longer than that, much longer than that. But the point is, the market makes a low. You can see CMG was at the bottom of its base. And then as we had the follow through day, we had a real strong move up in CMG, but it's still in a deep cup base. So in orange, I've highlighted the market coming down. The market corrects, and you'll notice that's coincident. It forms the handle of the larger cup with handle in the base, making this base pattern. And so that's really important to try and line up index action in real time. This is not always easy to do, but it's definitely worth your time to study some historical precedents like I'm showing you here, and then try to bring it back to some of the action that's going in leading stocks, because it can give you some clues on who is the leadership in the market. You'll notice with this handle, things came down on light volume, and then we had a big reversal day, and then we had multiple blue days up, and the volume picked up. That's exactly what you want to see. It's right at the point where it's breaking out of the cup with handle. So CMG is a classic type 2. So I mentioned a couple of weeks ago about, I think I tweeted, there's a lot of push and pull in the market right now. There are some institutions that believe we're headed to a recession, and they're playing it very defensively. But there are other institutions out there that clearly are starting to identify the new growth leaders for the next bull market. So even though we've seen some signs, breath signs that the market has turned, it takes a long time to turn a big tanker. So it takes time to get all the institutions in alignment. So we're still seeing this process take place in real time. So we have to give it our attention and be very, very flexible. It's really crucial to be flexible right now. Friday's action was strong enough that I think you should be increasing your exposure in a very selective ways. It's certainly not a plunging environment, but select increasing of exposure to some of the key leaders would be warranted. Now, the leadership, to be fair, is very scarce in growth. There's not that many. So keep building watch lists. There are names that are building bases, and try to really keep your tabs and know the leaders and what their action and price action is showing you, and be very selective. Tuesday morning, as a reminder, we're going to get the CPI number. That could create quite a bit of volatility up or down. So just be aware of that if you're initiating positions and holding positions. So again, another reminder for the blue sky. Please sign up for this event. You will not be disappointed. It's a Zoom event. If you sign up, you can watch the recordings later at the time of the event, which is on a Saturday from 10 a.m. Eastern to 7 p.m. Eastern. You can, after the event, you can watch the recordings for 30 days, unlimited. So even if you can't make the live event, please sign up. You'll really, really will enjoy it. So that's all the time for now. I hope everyone's doing well and navigating this very tricky market. I'll see you on the next general market update.